Vikram, it's a pleasure to have you. This is a discussion that I was genuinely looking forward to. I've had the opportunity of, knowing you, speaking with you on multiple occasions. I particularly like some of the perspective that you had around, many businesses and many sectors. This is one opportunity that I would want us to be discussing, some of these bits and pieces, which the audience at Asia Tech will enjoy thoroughly. Thank you so much for taking the time out.
It's a pleasure to be here, Ashu. We've known each other for a while now, so thanks a lot for having me on this session.
Vikram, before we dive into the topic, right, and 2020 has been a very, very unreal year, right? It's moved many things that were built around us, right? Possibly, systems, processes that we designed for over 100 years got disrupted all of a sudden, right? And here we are on a very, very clean canvas, right? And I have many questions around that. But before I get into that, if you could give me a run through of IvyCap, its construct, some of the portfolio companies, areas of interest, that'll be a fantastic standpoint. And then, of course, we dive deeper into all the other questions that we have.
Sure. We started in 2011.
Mm-hmm.
My own background prior to that, I had set up India's first healthcare life sciences private equity fund for the
Wow.
Pyramid Group.
Right.
It was in the year 2008-9 when the markets were really bad.
Right.
At the time when you would recall, Lehman Brothers crash happened and
Right.
the global markets were melting at that time.
Right.
I was able to raise about $100 million in that market,
Wow.
but all domestic capital. This
Mm-hmm.
was financial institutions in the country.
Right.
And while I was still building up on that fund,
Right.
Ramal decided to sell their healthcare business to Abbott. This was one of the largest deals of its time. The $3.72 billion, and part of it was non-compete, and kind of became an interesting situation
Mm-hmm.
where he had to then decide on what to do with the fund.
Right.
In the process, of course, the fund got defocused there, and I decided to move on to set up IvyCap Ventures.
Mm-hmm.
The background is that during that fundraising experience in a tough
Right.
time, I met a lot of alumni of the IITs. Since I'm from IIT Delhi,
Sure.
even if somebody from IIT Bombay or Kanpur or any other IIT, the connect was instant.
Mm-hmm.
That gave me the idea that we could actually approach this venture capital investing
Right.
to the network of the alumni ecosystem approach.
Interesting.
So that's where initially reached out to my friends from my hostel days.
Right.
Immediately liked the idea, came on board, and we set up this platform and reached out to various directors and deans of IITs
Right.
to convince them that we would like to set up this platform. And I had created my own database of almost 75,000 IIT alumni.
Right.
So we reached out to them in the first year itself. Interestingly, ended up raising 240 crores for our first
Wow.
fund.
Right.
We had a thesis, which was basically, we said part of our carry, a significant
Right.
part of the profit that the fund management team makes, we said we'll give it back as endowment to the IITs.
Wonderful.
That concept really connected very well with the alumni.
Right.
Something that later on led to the launch of India's first endowment fund at IIT
Right. Right.
19 October, which was launched by the Honorable President of India at Rashtrapati Bhavan, where I was there to make the presentation as well.
Right.
But the whole concept brought this ecosystem so well together that we were able to quickly put together this fund. Lots of the institutional investors who had invested in the Piramal fund, they also came on board with
Right.
that. We made 10 investments from Fund 1 at Series A, mostly Series A, Series B.
Right.
We raised a second fund, 535 crores, invested in about 23 companies, including some follow-ons of Fund 1.
Right.
Now we're in the process of raising two funds. One is an angel fund, which is a small size fund, which
Okay.
is almost fully
Right.
raised.
Right.
And this is a 1,500 crore size fund,
Wow.
which we just started raising last month.
Mm-hmm.
we already have half of the fund already committed
Oh, wonderful.
from our existing investors.
Right,
So that's where we are. You know, I think it's been a very interesting journey so
right,
far.
right.
Really, the way things are going.
Interesting, interesting. And I almost see an entrepreneur in you, Vikram. I think I almost see an entrepreneur. I think 2011 was a very, very different period, right? I think we essentially were in a private equity. Private equity was more resonant, right? At least in the Indian market. And I remember there were funds just with about 100 crores, 150 crores of AUM, right? And that used to be like a big sort of a thing. And I think, and possibly there was the early days for even players like Chris Capital. I think they were also sort of very early in their setting up their shop in the country, right? So wow, and what is particularly interesting is that you've seen those cycles, right, of transition, and the 2008s of the world, and then of course the 2012 13s, 14 15 changed it, and then of course 17 18 was a very different phase, and then now 20, right? I think that must have brought in a lot of experience in terms of seeing the market and trends change, right, and how consumer behavior changes become.
You're absolutely right. I think gone through those tough cycles and various phases of how this ecosystem has evolved,
Right.
including how the regulators have also learned the game and how they have
Sure.
changed their policies over time, how the government has become more and more active and proactive,
Right.
how those policies have evolved, how the entire ecosystem of other funds
Sure.
has evolved. So I think, and the startup ecosystem itself and the maturity levels of entrepreneurs is amazingly different as compared to how it was
Right.
when we started. So you're absolutely right. I think this journey has been very, very interesting, multiple kind of phases of it,
Right.
and we are looking at very different phase as compared to what we've seen in the past. So absolutely right about that.
Interesting. Vikram, take us through your portfolio, right? I think you have a very interesting mix, right? And I think a lot of that portfolio has been very, very thought through, right? I've had the opportunity of course, having some glimpses of the thesis behind investing, right? But just take me through, some of those of your portfolio, and some of the things that are very key to the thesis of investing at IvyCap.
So our philosophy, Ashu, is basically around the people. So
Sure.
we are many times people say that they are sector focused funds or they invest in certain sectors.
Right.
We are very clear in our minds that we are a people focused fund.
Hmm.
So for us, entrepreneur is the core of
Right.
any. So therefore, technically, we are sector agnostic. However, obviously there are certain sectors that we know are growing faster as compared to other sectors.
Right.
So a consumer tech or a health tech or an edu tech or even fintech, and then B2B SaaS and enterprise.
Right.
These are the sectors which are really hot and have lots of opportunities there. So obviously our portfolio has somehow, falls into these main sectors right now.
Right.
And most of the deals that have come to us would have come to us through our alumni ecosystem again.
Hmm.
We had created a platform called IvyCamp, which is
Right.
basically an engagement platform where you will see large number of startups coming and registering themselves. The platform itself has a
Right.
score criteria and AI-driven algorithm, which has a rejection criteria. So we would
Right.
have time, maybe 20, 25,000 startups would have come to the platform, but almost about 20,000 of those would have got rejected by the platform itself.
Right.
So that, then humanly it starts becoming a little possible to at least
Right.
start some of these startups. And that has been one of the biggest strengths for us, that, the kind of quality deals that have been coming to us.
Right.
That's number one. Number two is, once we start talking to these entrepreneurs with their, backgrounds, etc., we are able to do a lot of background checks through
Right.
common connects, through the alumni ecosystem, and we filter it down to a handful of startups that we want to really look at very deeply,
Right.
get the opportunity to engage with them over a period of time. So it's
Right.
not like a typical, fund you will see, or a, early stage funds would typically have like a very short period of time to decide.
Right.
Where, looking at multiple term sheets and they say, okay, you have time until next Friday to say yes or a no. We don't work like that. So,
Right.
for us, we engage with these entrepreneurs for a long period of time. On an average, we would have spent 7 to 8 months with these
Right.
people, multiple interactions. We've been tracking these people, and then a time comes when we believe that they started taking off.
Right.
And when that happens is when we start, negotiating how we can really partner with you and, you
Right.
know, partner in your growth. And then at that time, it's not a deal even for them,
Right.
more of a partnership in the journey of
Very
your.
interesting. Right.
So that is the approach we've been following so far,
Right.
and our entire portfolio has been built like that.
Mhm.
So whether it is Purple or Clovia or Bluestone or
Right.
Bitcoin by Kilo or Wavecoof,
Right.
any of these companies, we would have known these entrepreneurs for a period of time
Right.
before we finally invested in them.
Very,
So, so that's the kind of approach we've been following so far.
very interesting. And Vikram, it's something which is, and I'm sure this is a question that has come to you as well, right? That there is a lot of you would have seen a lot of money flow into pre-revenue companies, right? Or companies which are not necessarily uh, where the true reflection of what could be is visible, right? In terms of say their cash flows and so on and so forth, right? I think one thing which is distinctly stood out in your portfolio is that these are companies with a very clear line of transaction, right? With a visibility in terms of possibly their early traction, and what could be is far more visible, is more predictable than a lot of these pre-revenue companies, right? Is that what are your thoughts about that?
Yeah, so we actually like to see proof of the pudding, and we like to see the real value build up. And
Right,
when we look at a particular company or a transaction, we like to look at the entire space
right,
and how these guys have performed as compared to the rest of the players in the market.
right,
And that's how we would like to evaluate. Um we also look at the capital efficiency mindset
right,
of the founders. And the capital efficiency mindset can also only be shown if they've actually shown, where the money is going and how they're
right,
actually converting into customer acquisition
right,
or unit economics, or sustainability of
right,
those things. So, and since we spent some time with them over a period of time, it gives a better view of such things, and
mhm,
that's why you would see that our pre-revenue focus would be very less from
right,
that. But we have recently launched an angel fund
right.
where we are investing much smaller tickets. It's a separate fund
Okay,
where it's purely the bet on people.
right,
They do not necessarily have to have revenues.
sure.
As long as they have the right product and there is some validation of that product, there's
Okay,
some market fit or a product market fit or entrepreneur market fit,
right.
we try to take early bets over there. So we are actually looking at almost 25 to 30 companies in the portfolio.
Oh, very interesting.
Already made 5 investments there, and
Wow.
as they scale up, then we would like to follow them up, even in Series A, Series B rounds. So
Right.
that's.
And would you want to name some of these companies that you've invested in, or are they undisclosed right now?
No, four of them at least are already in the public domain. So we
Right,
invested in a company called Trillbit, which is
right,
started by entrepreneurs out of IIT Kharagpur.
right.
They've developed this technology using sound waves to transmit data.
Oh, very interesting.
And we were the first investor. I'm Ahmedabad as an investor. Techstars came on board, and then they recently raised another $1.5 million round led by Silicon Valley-based investors.
Right,
We invested in another company called Expertrons, which was also a Series A, a seed stage bet for us.
right.
There again, the company is done exceptionally well. Within 4 or 5 months of our investing, they've now closed their Series A round already. It's
Interesting.
a video bot technology using platform
Right,
to help people to connect with consultants or aspirational people that they want to talk to. For example, somebody went to Harvard last year.
right.
How do you get access to those people? So you can
Hmm.
access those people through Expertrons platform.
Okay,
Uh, Third one is a company called Purple Tutor,
right,
which is very interesting platform, which is a tutor-based platform. It's very similar to what White Hat Junior did. It's a coding
Sure.
platform. And when I looked at it for the first time, I thought that maybe White Hat Junior has already done what these guys are trying to do.
Right.
But when you look deeper into this space, you realize that it's a huge market, number one.
Right.
Number two, 60% of the revenues, even for players like White Hat Junior, actually comes from US markets,
Right.
global market actually. And this company, right from the time we invested just 1 crore in them, they scaled up from very near zero revenues to almost now $2 million run rate revenues in a just a 4 or 5 month time frame. So these are some examples, and we're just closing another one, which is another deep tech company. So these are coming from mostly the IIT alumni ecosystem right now.
Right. Right.
The very very smart entrepreneurs trying to really make a difference in new age technologies.
Sure. Interesting. Vikram, one thing that is, you highlighted across a couple of your points, right, is essentially your, focus towards people, right? And IvyCap's philosophy being people first, right? And when you say people, so two questions, right? One is how important, or say, what percentage of your portfolio will have founders who are essentially IIT IM? That is number one. Number two, what are some of the other facets that you would want to look at, right, across your conversations, right, with these founders in, say, the angel level fund that you set up, and even the larger fund, right? What are some of those traits that you would look at?
So, what percentage of the portfolio would have, founders coming from the IIT background specifically would be around
Sure.
50%.
Okay.
If you add to that the IIM alumni as well, so they'll add another 30%. So 80% of our portfolio will have IIT/IIM background
Okay.
entrepreneurs. And the traits that we look for is not necessarily that you have to be,
Right.
uh, the alumnus from one of these institutions. It naturally happens in such a way that,
Sure.
because we have this ecosystem supporting us, the references that come to us, come with that kind of background.
Right.
But the typical traits we look for is, you want to make sure that the entrepreneurs are actually very passionate about the
Right.
problem to solve, and they're doing it for the right reason. They are, basically taken the right risk. I mean, the
Mhm.
risk is very important. What kind of risk they have taken? Have they left their jobs already, or they're just toying around with the idea?
Right.
Uh, they just come to you and say, "Hey, once we get the funding, and then we are fully on board." Don't like those entrepreneurs.
Right.
Then, of course, they need to be aware of the environment. So, therefore, they need to be aware of the competition. How they're different.
Right.
Uh, they need to be very good at team building.
Right.
So that should be demonstrated through the kind of team and the quality of team that they put together.
Right.
Very important there is value sharing is value
Mhm.
creation for
Right.
us. That we want to see, is the stake concentrated just in one single hand, or has it been distributed very well? And then, of course, we want to see whether they're good at fundraising, because
Right.
maybe investing in very early stages, and if they're going to go to market to raise larger money,
Right.
we should be able to do that. So just a little bit of understanding about what are the other funds in the market. Do they understand what are the kinds of investors out there? Are they talking to the right investor, or are they
Right.
just approaching anyone and everyone? So
Sure.
these are some of the key things that we try to understand.
Interesting. Interesting. Vikram, you mentioned about Ivy Camp, right? And the way you sort of source companies from there. And I think, there's a lot of activity that you do under that, right? And of course, at the fund level as well, there is a lot of strategic input and advice and handholding that you bring to the table, right? I think you kind of, it's a mentoring led model. I think something that you also highlighted in one of your points, right? What are some of the, is there a process to it? One. Second, what are some of the key areas that, for example, the IvyCap team under your leadership partner with, when you invest in a company? Partnerships, for example, what kind of mentoring, handholding?
Yeah, so there are two things actually. So one is the Ivy Camp platform, and it has
Sure.
naturally evolved because, when you reach out to 75,000 alumni of IITs, I mean,
Mhm.
what happens, and then deliver the core message
Right.
that in the endowment ecosystem, we are looking at entrepreneurs from this
Sure.
ecosystem, and then the endowment itself is focused on building further entrepreneurship and supporting innovators and
Right.
that ecosystem. There's a natural kind of response that you get, and a quite substantial response, and that's exactly what happened. In the first year itself, we received almost about 20,000 responses.
Right.
It's very difficult to manage in a short span of time, but we kind of somehow onboarded them, and that's when we started realizing that you can't manually handle
Right.
such a large active set of people who really want to get involved.
Right.
uh, we're basically asking three questions to them. Number one was, would you want to give us a day of your month, and we will
Right.
take that from you.
Right.
Second thing, you were saying that, are you an entrepreneur yourself, or know an entrepreneur that you would like to support, and we would like to really support them as well. And the third one was that if you're looking to invest, then of course we can offer an investment opportunity.
Right.
So the response was clearly bucketed around these three different areas. There, of course, the largest was around, yes, we would love to be mentors, we'd love to contribute a day of a month,
Right.
followed by, hey, we have this startup idea, or we've been working on this startup. That created a huge deal flow for us.
Right.
And then the last one was, hey, how much money are you expecting? And I'm happy to check. Uh,
Right.
so that really helped us build this whole thing. And we then thought that let's put this in a structured fashion on a
Right.
platform. And that's when we put our IvyCam platform together.
Right.
It became such an active platform that corporates started coming on it, and they started asking us, hey, can we use this platform,
Right.
and use the startups to this platform. So we have various programs going on with various corporates who actually like to run very specific targeted focused
Right.
programs. The IITs themselves came on board. The incubators across IITs, IIMs, and other education institutions came on board.
Wow.
Then we also got on board, of course, the mentors were there, the entrepreneurs were there, and slowly we started seeing activity building up on the
Right.
platform. Because obviously, and then of course, one area where we still lack and we're trying to build that is bringing the innovators on board,
Right.
which
Right.
is your next phase, that you bring most of these people who are coming from these campuses working on very smart, innovative ideas that they're trying to patent,
Right.
but they're not yet commercially oriented, so they don't
Interesting.
yet see the market side of it. So
Right.
we want to really tie the entrepreneur side to the innovation side, to see how we can bring up more
Beautiful.
patented stuff,
Right.
create products out of this ecosystem, which can actually then become much larger, and can we create India as a product country, and create many products across the entire ecosystem. So that's the whole idea, and then part of it getting funded through our give back, through our endowment,
Right.
and it's becoming a sustainable model now over a period of time.
That is amazing, right? I think that's a very US way of doing things, right? Where you have innovators, and then of course you have the industry academy. I think the relationship there is much thicker. I think we are still sort of establishing those. I think those bits and pieces, and I think we're still creating the foundation. But I think it's heartening to hear what you're doing, right? I think there are many innovators in India who unfortunately don't have the resources to take it to the market, right? And here is a platform which is helping them do that, and with some of the best outstanding leaders in the country, right, or possibly in the globe, to coming in and helping them mentor, and of course then the capital support. I think that's such a 360-degree holistic approach. I think Vikram, that's absolutely fantastic.
Yeah, so I just want to add to that.
Sure.
What we did is, we had the opportunity, once we started putting this whole thing together, to put a proper structured mentoring platform over and above this. So we
Okay.
actually, what we've done is, there is a mentor trust that we've
Right.
created.
Right.
465 mentors there. Then we have an extended 5,000 mentors coming from the alumni ecosystem.
Right.
The model that every time we do a Series A investment, 1% over and above our stake in the company goes to this mentor trust, which then gets distributed to these mentors.
Beautiful.
And in the process, we are able to bring on board some very high quality mentors, not only from the alumni ecosystem, but from wherever the entrepreneurs need support from. For
Right.
example, Clovia, which is a lingerie business,
Right.
we were able to bring the former president and CEO of Victoria's Secret on board.
Right. And I think which was recently announced in the media as well.
Correct. So that purely came through our mentor platform.
Right.
Similarly, in our dental lab business, Lecture Dental Labs, we brought another person called Norm Weinstock, who was, a very senior person at one of the largest supplier to the dental lab industry in the US.
Wow.
So you're able to actually bring such talent together
Right.
because of the structured platform that we have. But here's the even more interesting part.
Right.
Recently, with the three of the exits that we had in the month of March, there was a substantial payout that went to the mentors, right? Because the value is linked to our entry point and the exit point.
Right.
We distributed this back to the mentors. Majority of them came back and they said, we love this endowment model, whatever is
Right.
GDS, please give it back to our alma maters on our behalf.
Right.
So that give back is actually being encouraged even further. And,
Wow.
we believe that this is now becoming real, now a reality. That's what we are quite excited by. There's
Right.
the endowment, which is the core passion which is driving us, which is the sustainable part
Right.
of this entire ecosystem.
Interesting. Vikram, what a brilliant perspective. When we talk of policy, I think we talk about all of these things, right? And we essentially talk of all of these things in their independent silos, right? And I'll be honest with you, for the longest time didn't know that there was so much which you were doing at IvyCap. I think that's so beautifully integrated, right? And I think that entire perspective of giving back is so powerful, right? I think people want to contribute. Unfortunately, fortunately, they have resources, they don't have resources, right? But here, I think by incentivizing intellectual capital and the way you are sort of letting them capitalize on that possibility, enabling that, and then that payback to the community is phenomenal, right? I think it's an initiative par excellence.
Yeah, I studied in the US as well, and I realized, most of the alumni that we reached out to, and those who have studied in the US universities,
Right.
they know very well that these US universities have been very proactive in
Sure.
paying or giving back to their
Right.
alma maters.
Sure.
And there, what we realize is that, even though they have better attachment with their undergrad universities,
Right.
end up paying more to their postgrad only because they have organized structured endowment funds.
Right.
So the moment they heard that there's a concept like this,
Right.
really got excited. And that's the reason when we talked about setting up $1 billion endowment fund for IIT Delhi,
Right.
we saw a lot of excitement around the ecosystem. And even if you look at the US universities,
Right.
so rank them by the size of the endowment funds they have. The
Right.
100th rank university will be $1.2 billion of endowments, right? So that's the way they look at the endowment. In India, the first endowment fund was launched in 2019 October. Can
Right.
you? And given the potential we have, we should have done it long time back, right?
Right.
So I think now there's a beginning. IIM Ahmedabad followed it after six
Right.
months. Delhi starting. IIT Madras is now very structured already. I mean, they had a very similar structure. Now
Right.
they're together in a similar way. Other IITs are also doing the same thing. So it's becoming more and more exciting now in terms of the overall endowment ecosystem in India.
Wonderful. Vikram, I'm going to move a little away from the discussion that we've had, right? And I'm going to go a little more macro, right? And I specifically want to discuss the 2020 scenario with you, right? And all of us agree, right, that there's been a huge change that has happened, right, in possibly everything that we did, be it in our professional choices, our careers, in what we did, at a personal level, the way we consume things. Uh, you know, all of it got disrupted, right? But what it's also done is that it's kind of given us an opportunity to take a step back and reimagine, how say engagement will be or how consumption will be, right? And that also means that it's a huge opportunity for a lot of technology adoption, right? We've seen a lot of that already happening, and a bunch of sectors have, and seen the kind of run through. EdTech being one of the very clear outliers, right? And others are sort of catching up, right? What are your thoughts about 2020? So at IvyCap, what's your macro philosophy? Has that changed? what's the new macro philosophy beyond 2020?
So I think there are two important things to note. One is that India continues to be a very attractive story,
Right.
uh, and of course, COVID has disrupted the entire world.
Mm-hmm.
Uh, you know, Situations have changed quite substantially ever since the lockdown started last year.
Right.
How China was seen by the world markets before COVID and how China is seen today, I think perspectives have changed quite substantially.
Right.
India, in fact, had a big opportunity and much bigger opportunity that, if India was more ready last year, it would have captured it much better. But
Right.
unfortunately, we were not ready.
Right.
But whatever the opportunity that was offered to us, at least it has taken us much faster on the growth path of getting deeper into our markets.
Right.
So entire connectivity to the rural India, to the people who were not on the internet earlier, people who didn't have smartphones earlier,
Right.
that penetration happening much faster
Right.
over times. This has led to a much faster pace of growth of those startups which pre-COVID had figured out the model of online.
Right.
Uh, so businesses like Purple or Clovia or even Bluestone
Right.
and other, of course, large companies which have actually gone not unicorns earlier and are becoming unicorns. We know that this year itself, by now we already have about 16 new unicorns, right?
Right.
And the numbers keep changing, but that's a pretty good number, right? I mean,
Right.
just within first half of the year, you have so many unicorns getting added
Right.
to that size of unicorns, which means if you continue on this growth,
Sure.
have another 100 unicorns added in the next maybe 4 years or so. And I think India is announcing itself in the global market as a very, very serious market, whether it comes
Right.
to consumer market or availability of the talent from a technology perspective, or coming up with the new innovative models where products are now coming out of India, right?
Right.
So historically, one of the biggest issues or the questions that was being asked is like, where are the products? India is a services oriented market.
Right.
People are just trying to copy the Western world, and the models
Right.
are Me2 kind of products. Where is the innovation? So
Right.
I'm quite excited, especially in the last 2 years. I'm seeing a lot of innovation happening in
Right.
India now. And I'm even more excited, even though some of this is very early stages. But I'm seeing that mindset shift.
Right.
And with this platform like an IvyCap,
Right.
able to identify some of this innovation and able to support them very early on. We are quite excited about the opportunity that sits there. It's
Interesting.
at the right place, right time. I think right now that's the way.
Interesting. Interesting. Vikram, which are some of the sectors that you think are going to go through a sea change, right? I mean, edtech is clearly something that we've seen, right? There's a lot of that which has happened, right? Which are some of the other sectors that you think are going to benefit from this massive change that we're going to go through? What are some of your, say, for example, what does your priority list look like?
So, healthcare has been a neglected sector for a
Right.
long time in India for various reasons, right? I mean, it has been driven primarily by doctors,
Right.
handful of doctors, and India ratio of the hospital beds to the thousand population and the number of doctors and the medical professionals has been
Right.
relatively low as compared to the global market. The insurance penetration has been much lower as
Right.
compared to developed markets and other markets. I think one major fundamental shift that you've seen in the last few years is the insurance penetration, which has gone from, in the last 10 years, from just a single digit penetration percentage
Right.
to now almost one third of the population, or maybe, getting towards 40% of the population,
Right.
which has healthcare insurance. So I think that has been a very, very interesting trend.
Right.
The other interesting thing is that as insurance builds up into the healthcare system, uh, you know, the it leads to much more standardization more access to modern medicine and modern treatment, and therefore better potential outcomes. And then with this entire digitization that has happened in the last 2 years, we are now seeing the real benefit of telemedicine and telehealth. People have become comfortable.
Right.
The mindsets have changed. Earlier, even doctors themselves were not comfortable, to give advice online. They were not sure what kind of medical legal issues could happen. You're
Right.
actually giving advice to a patient. Later on, the patient does something, and they might come back to bite you in terms of, you had advice this, but something else happened.
Right.
All those things are now kind of being addressed in different ways. So I think, so health tech to me is actually going through some fundamental shifts right now as we speak, and offers probably the biggest opportunity at this time, in my view,
Right.
in terms of the potential opportunities for investment in that space. So we're quite actively, we made a few investments very recently. A company called Synapsica, which is a radiology AI company, Data, which is a drug discovery AI platform,
Right.
and quite a few others that we're currently looking at with in very innovative solutions in that space.
Sure.
So I'm quite excited about that. Of course, opportunities because of this fundamental changes happening across the entire country with respect to the penetration of internet and even access to banking systems across rural India.
Mhm.
I think the opportunity lies across different sectors, including agri-tech,
Right.
uh, fintech, more from the rural banking perspective. I think there is a neo banking opportunity which is emerging.
Right.
Edutech, of course, still has a much large opportunity. In fact, edutech for quite some time has been a neglected sector from the investors' perspective,
Right.
primarily because of this the issues of being seen as a sector influenced by political interference,
Right.
and leading to a lot of decision making happening purely for non-value add perspective, right? So those things have changed quite substantially. So therefore, edutech has become a substantial opportunity.
Right.
Of course, then I talked about the product itself with the tech platforms,
Right.
the SaaS platforms. Quite a few of those coming with the use of artificial intelligence, machine learning.
Right.
Robotics is a huge opportunity. We recently invested in a company called Miko, which is a robotics AI company
Right.
uh, on children, actually, providing those robots which communicate very well with the children, and it caters to the global markets. And then I think blockchain is an opportunity which is sitting out there, but it is not yet have happened to
Right.
real potential, because while cryptocurrencies have taken a huge front stage in Western countries,
Mhm.
India, I think, has created a perception that it is not something that one should look at. But I think eventually
Right.
they come to India, and I think this is an area where you'll see a lot of activity happening. So yeah, I think these are some of the interesting areas, and of course, the other one is AR VR, which is
Right.
actually happening to some extent in the education space, especially in the medical education and related areas,
Right.
interior design or architecture and other things. But I think that's another potential area that can actually, uh, create huge opportunities for investors.
Very
So these
interesting.
are the areas that one can think of, in the current situation.
I can only imagine the kind of complexity that you're dealing with from, I think, day in, day out, right? And I think there's so much more, need for an Ivy camp like platform, right? Which can help you, sieve better, segregate better. Vikram, please go ahead.
I was just going to respond to that, saying that that's the reason we focus on people, right? So that's the
Right.
reason we want to focus on the entrepreneur, because, as you rightly said, there's so many things out there, so many
Right.
opportunities out there. So we want to really understand what the entrepreneur is thinking, and
Right.
what's the kind of clarity and focus they have.
Right.
We're investing in them. We're investing in their vision. We are partnering with them to help them achieve their vision.
Right.
Effectively, that's what we're doing. So I mean, we can't enforce what we believe is the opportunity, which they may not agree with, right?
Right.
So that's the whole point.
Interesting. Vikram, what's your idea of Bharat, right? There's a lot of conversation going on. Everybody seems to be deliberating around it. I think, post 2020, there's a huge surge which has happened around the narrative of Bharat, right? How do you view it? How do you view this as an opportunity? What are some of the elements that you think, uh, are going to be defining when it comes to the consumption story of India when you talk of Bharat?
So there are multiple components of it. One is, of course, we are dealing with different cultures, different languages,
Right.
different buying behaviors, right? And but I think one common theme is that a large population is in the rural India.
Right.
So the farmer community is very large. We're talking about 140 million plus
Sure.
farmers, but these are mostly majority of these are marginal farmers, so very small land holdings. But at the same time, I think the India agricultural land is very fertile.
Right.
I think if it is done in the right way, the productivity gap, which is very large right now, can reduce, and therefore the productivity can increase quite substantially.
Right.
In area, I think, in fact, we had made an investment in a first fund in a company called RML, Reuters Market Live, focused on farmers.
Okay.
Uh, the idea was that you empower the farmers on their mobile phones, giving them information
Hmm.
to take decisions on their crops. What to grow at what time, what treatment to give, and how to deal with environmental or even weather changes, where to sell their crops at what prices. All the information was very powerful, and I think it was a little ahead of its time at that time because smartphone penetration was still not there.
Right.
That's why the company didn't do much well.
Sure.
But a model like that has huge potential even in today's market.
Right.
But broadly speaking, I think Bharat as an opportunity offers huge multiple levels of opportunities,
Right.
whether e-commerce, and I think we are seeing a lot of potential out there. Quite a few startups are actually focusing on providing access to products,
Right.
whether healthcare or your regular grocery products, etc. So that's going to the next level. Any models which are tested in the metros,
Hmm.
uh, are now going into the rural markets and
Right.
tier three towns. So I think multilingual is a good opportunity, and then there is another bottom of the pyramid as an opportunity because we still have, unfortunately, about 20-21% of the population which is still below the poverty line,
Right.
and that population also needs to be catered to and has to be brought up from that poverty line.
Right.
And there is a lot of impact investing also which is happening, and that actually is something even we as IvyCap recognize is an
Right.
important area, and we started working on that as well. So I would say Bharat as an opportunity probably offers much larger landscape of opportunities as compared to India.
The urban India. Vikram, I have a point, right? And this is in continuation with the Bharat question that I had, right? Is that we are struggling with a massive unemployment, right? I think Bharat still has to go through a huge standardization process, right? A large part of the inflows are either coming from, say, agriculture as the main source of income, or some government support, schemes like Manrega and stuff like that, right? But Bharat struggles with essentially a very low per capita, right, of income, which essentially means that for that to translate into purchases, I mean, it'll have to grow many folds to translate where a higher disposable income is available, which translates into purchase, right? Uh, and of course, while the government is trying what they are we romanticizing the idea of Bharat, or is this going to translate? Is, for example, cheap data-driven engagement translate going to into purchase a sustainable, consistent purchase? What are your thoughts about it?
No, you're absolutely right. I think we are still very low in the entire value chain in terms
Sure.
of the per capita, income levels and spend levels in rural India, especially.
Mhm.
uh, and therefore there's a long way to go,
Sure.
bridge that gap. I think the good news is that at least innovative business models are coming up.
Right.
uh, unless we provide the basic things, the basic needs need to be catered to first, whether it is banking requirements or healthcare requirements or education. I think some of these are very fundamental things that need to go very
Right.
deep into this entire population. And I think with this entire initiative by the government to get the rural population also get insured, I think it's a big initiative, and it's in the right direction. The challenge is that such things always take time from a execution perspective. I can see the government, of course, has the right intentions and sometimes also the right business models.
Right.
But I think it's not easy to deal with the size of population we have. Right, we're talking
Right.
about total population of 1.4 billion, and trying to make a difference to the 70% of the population. Uh, but I think the direction still seems to be right in my view. Entrepreneurs are emerging even from rural India. In fact, we are seeing some entrepreneurs coming from very remote areas,
Sure.
very smart entrepreneurs, and if they are
Right.
trained and educated well, and that's the part that we want to also address in a very focused way, even through our IvyCam platform. We
Right.
want to take this platform even to rural India, onboard these entrepreneurs and mentor them. I think all they need is good mentorship,
Right.
good connect and support. And once they do that, I think they can do wonders. And if we encourage these entrepreneurs, then I think things could move much faster in those remote areas.
Interesting. Vikram, I see D2C as a massive opportunity, right? And I think D2C is going to be an expression. I mean, this was, possibly micro entrepreneurship, about a year and a half back. But all of a sudden, I think the surge of, a lot of these very businesses getting listed on the Amazons of the world and the Flipkarts of the world, and so many other distribution platforms, right? And then consumers going out and buying and experimenting, given that, the physical infrastructure literally sort of collapsed, has given a new, kind of a view to a possibility of going out and creating brands, right? Uh, what is your thought about the D2C, the entire D2C space, right? I mean, the direct to consumer, the relationship between a brand and a consumer is now becoming direct, right? Which of course opens up a lot of opportunities for analytics and so many other things. But like you said, a rural entrepreneur, somebody who's possibly doing honey, is now in a position to build a very large scalable business, right? What are your thoughts about this, right? I mean, is D2C is the next big gold rush of India, or too early to say?
No, no, I think you're right. Eventually, and this, when we saw purple for the first time, for example, why it excited us on day one. It's because this whole approach towards building the persona of your customer and through data that is
Right.
available to you. And if you think technology and if you're able to really leverage the multiple interactions data
Right.
with your customer, if you're able to understand your customer very well based on
Right.
that those interactions, you will be able to really cater to their real needs,
Right.
right? So rather than pushing your product to them, you will build products as per their needs, and
Right.
therefore it will pull rather than a push, which is what is a trend that we are seeing now.
Right.
The entrepreneurs building that kind of approach in their platforms, trying to understand the customers and therefore segmenting it or micro segmenting it. Now you're
Right.
looking at micro, you know, customer which is a very, let's say less than 20-year-old, located in Indore, and has an educational background of engineering, and is looking to buy maybe gaming products. So I
Right.
think you can actually segment it to a very very detailed level,
Right.
and that you can further classify in terms of what kind of games they like to play, etc.
Sure.
And there are multiple ways to actually understand their psychology, and based on
Right.
that you can make out what kind of products they will prefer more
Right.
as compared to others.
Right.
So when data can do that, you're able to really you know do much focused marketing,
Right.
and bring your costs down substantially,
Right.
and also bring the pricing down, and therefore make things available at much larger scales, right? So that is what is happening right now.
Right.
So I think we are beginning to do that. Uh, Purple did that very, very well. In fact, they started with this whole thing, and they've actually did an excellent job in actually
Right.
understanding the market and customers. Most of the other, I think Amazon, of course, has done it at a very, very large scale and
Right.
has done a good job at that. And any D2C platforms are who are able to understand their consumer well and is able to communicate with them very well,
Right.
is able to really then build sustainable long-term relationship with their customer, therefore sell better and get
Right.
better. So that is something we are noticing even in our own portfolio companies, and those are the
Right.
learning we are also now bringing to them to help them really work in a focused way with their customers.
Interesting. Vikram, there's a huge emergence of, revenue-based financing, venture debt. All of that is emerging, right? I think you also had an interest in the venture debt space, right? What are your, I think the financing mechanism is becoming so much more evolved, right? What are your thoughts about it, right? Is this, how do you see, these options evolving?
So, of course, uh, debt as a form of financing, uh, of course, the traditional banking system has been trying to provide, but they're very focused on cash flows and
Right.
profitability.
Right.
Then came when the venture equity or venture capital started, and you can compare that even in the US markets,
Right.
equity investing started and then followed the venture debt over a period of about 7-8 years after the venture capital started.
Right.
And the natural evolution which is happening in India as well. The venture debt typically is misunderstood as venture risk as debt returns. So, which is the reason many times people don't understand, why would you want to take such a high risk and actually, uh, reduce your or cap your upside.
Right.
It's one needs to go deeper into structuring, because there are a
Right.
lot of structuring options which have come up and innovative structures.
Right.
Entrepreneurs themselves are looking for innovative structures, and you mentioned about revenue-based financing. This is
Right.
one of the innovations which has happened, and it's actually doing a good job now. Uh, there are various other innovations which are happening in terms of in the portfolio, for example. If the company is struggling for a shorter period of time, but we as VCs are quite bullish about the company and we know that we're going in a certain direction, we would like to back them further. Then some of the debt providers may even come to the VC funds and say, "Hey, would you be willing to back this
Right.
and I will give them loan on your backing,"
Right.
which means that you basically the VC fund becomes a guarantor.
Right.
So there are those options which are building up and quite a few innovative products happening. Warrants is a very good instrument
Right.
which is up together with the venture debt to give a kicker to the venture debt investing. So we actually had launched this product prior to uh, COVID, but we noticed that during COVID time, there was this a little bit of issue in the minds of the founders that they wanted to, you know, uh, deprioritize the venture debt payments.
Right.
That's when we decided to postpone the venture debt a little bit
Mhm.
and prioritize our other funds. And we will be launching a venture debt, back soon because we see a huge demand for that.
Right.
The demand is only building up, and that's the reason. You know, just a handful of venture debt funds that started just a few years ago are already raising thousands of crores
Right.
from the domestic market,
Right.
looking for such products, and we will be coming up with one soon.
And I think also, that I think the entire transactional ecosystem is becoming so much more transparent. I think more businesses are transacting online, more consumers are transacting online, right? I think that brings in a certain sense of visibility as well, which possibly wasn't the case just about a year and a half before, right? I think things started to change 16 onwards, right? Post Demon, I think things started to change with a lot of wallets and a lot of fintech options that have come in.
You're
I think a lot
absolutely
of them.
right. It gives not only more visibility to the transactions, it also tells a lot about the behavior and attitude of the people, right?
Right.
So there's much more information available about the people
Right.
looking, right? So you can actually profile people much better
Right.
now than you
I
could
think
do a few years ago.
I think portfolio risk is going to get is will be defined better, right? I think in the evolved ecosystem.
It's at the end of the day, the way we look at it, it's about people, and the risk basically concentrated within those people, and that's the reason we track them over a period of time and keep collecting some data on how they actually operate and work. Same thing with the debt providers. They would look at exactly in a similar way. This whole CIBIL score actually comes from this whole understanding of the people, how they behave.
Right.
There are more such scoring mechanisms that you will see over time. Lots of these fintech companies are building their own scoring mechanisms.
Right.
Uh, and each of these scoring mechanisms could be in similar to CIBIL or could be even better than CIBIL.
Absolutely. Absolutely. And I'm personally a big fan of some of these, right? I think the way alternate lending is coming in, where they're creating their own lending stack, which is, where the relevance of the civil-like structure, which is so two-dimensional, right, is kind of decreasing, is phenomenal to sort of look at and understand. And I think that is amazing innovation which has happened. Vikram, I have a question which is very important, right? Which I think is being asked. I think will be asked a little more. Is that India, we have a tendency of getting back to normal very quickly, and this is something that we've seen, right? There was a lockdown that happened in March, April, May, June, and then of course the market slowly and steadily started open, and we were seeing a huge resurgence of people getting back to normal, right? Getting back to offices, and till the second wave hit us, right? Uh, do you think the thesis right now that I see in the market, right, and the kind of flow of capital which is essentially available to certain businesses makes you believe that certain funds and certain, say, fund managers have started to believe that this is a constant, right? Do you agree with what's happening right now? I mean, the kind of flow of capital, the kind of valuations that are happening, right? What happens if we get back to normal, right? If not, say, 100%, but even 30, 40, 50%, that would completely throw the projections into a very different zone, right? That possibly are leading into the kind of money inflow which is happening. What are your thoughts about
Yeah, so I think there's been a lot of debate around, are we in a bubble and when is that bubble going to burst, right? So
that?
there's a lot of that debate, and there's capital in the market, and most of it is also flowing from the US. We've
Right,
seen a lot of SPACs activities happening, and people are sitting on a lot of cash and they're trying to direct that somewhere, and India becomes a natural market. So therefore, is it going to be there for, maybe is it going to last for another 3 months, 6 months, 1 year?
right,
Those are the kinds of questions being asked.
right,
So let me kind of try and address this. We are talking about 55,000 plus minus startups registered on the DPIIT platform today, and the actual number of startups may be even more.
right,
And I believe that based on our estimates that we did, about 25,000 of them are angel funded today, right? So they
right,
are funded by either your immediate close friends and family or structured organized angel platforms, and there are many
right,
of them. Now that number translates to just about 500 to 600 series A funded
right,
startups. So effectively there is a huge gap between the angel stage to a series A stage, and then of course beyond that you see uh, you know uh, the failure rate is there, but much lesser as compared to
right,
from seed stage to series A stage. Now when the capital is flowing in, it's flowing in at little later stages right now.
right,
You see a lot of capital flowing at series C stages onwards. You see
right,
$100 million deals happening at those levels. I still see a huge gap when it comes to the bottom of the pyramid. Here we're talking about, we need a lot more funding. I mean, if you look
right,
at the amount of capital that is flowing at that stage in US
right,
or China, there's no comparison at all, right? I
right,
mean, you need at least 4 to 5 times more capital than what is going today into the system. I think we haven't even touched, I think it's less than $10 billion of capital which has gone this year into startups. And I think we need at least 30 to $40 billion
right,
into this entire ecosystem to be able to cater to this kind of a demand which is there, and to
right,
really build the real fundamental value on the ground. So there is still a huge gap. The bubble happens when the demand supply situation is in the favor of supply of capital.
right,
And I believe that the demand for capital will continue to be very high.
Right.
The supply will continue to be in short supply.
Sure.
From a macro perspective, of
Right.
course, when you start looking at specific deals, and that number which I'm talking about at Series A levels, and starts going to B and C, of course, the
Right.
number of deals are very handful, and the capital chasing there is very large. So the demand supply gap becomes imbalanced over there.
Right.
So therefore, things start looking like a bubble there, and start looking like
Right.
uh, as if this is stable or this is going to last for long.
Right.
If some of that capital starts flowing down the funnel, and starts investing at pre-series A, Series A stages, things will look very different, and that will happen because if you look at the last 1 year itself,
Right.
I think if you look at SEBI, I think probably more than 100 funds have got registered in the
Right.
last year itself, and they're all out there, looking to raise new capital, right?
Right.
And there are a lot more new avenues being created for raising domestic capital, and that is opening up, which is a great thing, which means that funds like large funds like A91 and their other funds in the market, which were earlier focusing on raising dollar money,
Right.
are now raising domestic capital because there is a lot of domestic capital available now, which is all positive. And I think I don't think in the macro picture it's a bubble.
Mm-hmm.
I think it is a bubble at a stage beyond Series C,
Right.
because the capital will continue to come in, but the deals will start getting overvalued, overheated up at that stage.
Right.
But I think we will have more fund managers at Series A levels, which is a great thing to happen for the ecosystem. And that will encourage more startups to
Right.
come up. And I think this 55,000 will grow to 100,000 very soon. And therefore, the 20,000 will go up to maybe 40,000
Right.
very, and therefore the capital requirement will only increase.
Right.
So I would say that we are not there at that stage where
Right.
capital is much larger than the requirement, at least for the next quite a few number of years.
I think you played a very safe one there, but listen, I like your perspective. I think the fact that a lot of that is going to now sort of percolate into a series and seed and and series B and all of that, right? I think that width is going to increase, and which is something that I think it'll be amazing to see, right? I think this is going to bring in a very different kind of an innovation ecosystem. I think the incentives are going to be very high, like you said. Vikram, this is a very classical question. I'm sure it's also a cliche question. I'm sure you've also been asked this, right? Is there an anti-portfolio, right? That to Vikram Gupta, to IvyCap, that you've had.
It happens with everyone, and right. So there is always see. Typically, you always have an investment philosophy, right?
Right.
So and you want to stick to that. You will
Right.
not make any exceptions.
Right.
You would have done the same thing. I would have done the same thing. When a
Right.
student came to us asking for $100 million valuation, looking for $5 million, um, we kind of said it was overvalued at that time.
Right.
Policy Bazaar, when they were raising their first 50 lakh rupees, at that time, not even looking at investing at seed stage.
Right.
It looked like as if, good. It's a good, entrepreneurs are obviously great.
Right.
Too early at that stage, and
Right.
you look at it later. You could never catch it after that.
Right.
So there have been quite a few such kind of misses, which you
Right.
later on think whether you would have changed your decision in
Right.
retrospect,
Right.
knowing what you know today. Would you have changed your call at that point of
Right.
time? Answer is
Right.
no, I would not, because I think uh, you would still follow the same fundamental principles.
Right. Right.
Would I pay $100 million valuation for the business at that stage with those
Right.
kind of numbers? Maybe I may have missed out certain important factors.
Right.
I should have ideally spent more time analyzing and understanding. That
Right.
is regret. Sometimes you don't get enough time because this was a deal where you had to take a call within two
Right.
weeks,
Right.
and we don't take decisions like that. If you take
Right.
it within 2 weeks, even if you apply all the filters, do as much analysis, you still don't get that comfort.
Right.
So I think we will not change our approach just because you think that you missed out a deal and you don't want to miss it again, because
Right.
eventually you will miss out on such opportunities.
Right.
But once that you invest in, or that you
Right.
portfolio, at least those ones are the filter ones, and there you will also make mistakes. Mistakes
Right.
happen as well, as they call type 1 type 2 errors, right? Type 1 errors, when you select something that you should not have. Type 2 errors, you reject something that you should have.
Right.
I think I would rather commit a type 2 error than a type 1
Right.
error.
No, and I think Vikram, just a quick point on that one, right? I think in hindsight, it's all 2020, right? It's always 2020, right? And I think your job is, and I think so many others, right, who are into investing space is to sort of predict the future, which is so dynamic, right? There are so many elements, there are so many moving parts, right? I think it's easier said than done, right? And I completely understand where you're coming from. Vikram, my last question to you is: what are your top 2 or 3 advices to entrepreneurs in the country? Right, we have a great set of entrepreneurs. We have very very motivated entrepreneurs. We have hustlers, right? I mean, I think India is a country of hustlers, right? What are your top 2 or 3 advices, right, that you think that they should sort of stick to, which will help them build a good, credible, sustainable business?
So primarily four things.
Right.
Number one, believe in yourself and
Got it.
believe in the passion that you set out for yourself for. Of course, do course corrections, get data, get advice, get information. But if you passionately solving a problem,
Right.
sure that you do it well. You do it really well. So I think many times people get distracted based on somebody will come and start shooting them down. Hey, this is not going to work, and there are more
Right.
naysayers than people who believe in you. And if you
Right.
believe in yourself, just go for it and continue doing it. Right. So that's
Right.
the one thing. Second is get right partners on board. So I think it's very important to build your right co-founding team
Right.
and right investors on board, because they are going to define your journey going forward.
Right.
Right. So it's extremely important that I've seen most of the startups getting killed only because they chose a wrong co-founder, or
Right.
you know, or they just chose a wrong investor, who
Right.
actually had selfish interest in kind of taking them into a certain direction.
Right.
So do a little bit of due diligence before selecting your investors.
Right.
So that's the second one. Third one is don't be afraid of failures.
Right.
So I think there is this, obviously, once you got into it, right? I mean, once you started something, failure is a part of the game. It is bound to
Right.
happen. You should,
Right.
when you're doing your planning and all that, you should assume that if things can go wrong, they will, right?
Right.
So therefore, create your worst case scenarios and always think from that perspective. When things go extremely bad,
Right.
how we still deal with them and keep moving, right? So there are plenty of examples where people would have been rejected by a large number of investors, and finally they raised their first check from someone and still you know became unicorns. Robin Hood
Right.
is an example, was rejected by 72 VCs before they finally got their first check and
Right.
multi-billion dollar company, right?
Right.
So never be afraid of failure and face things. And the fourth one, and I think it's also a very important one, and I think people don't realize it, is that be very conscious
Right.
of the environment and making a positive change to your planet. I think people many times get so bogged down about solving their business problem, and tend to forget that eventually you're doing the business with the permission of the society.
Right.
You have to keep thinking about how you bring about a positive change. And that's why we have now very seriously taken up this SDG framework into our
Right.
investment philosophy, sustainable development goals, which has
Right.
17 goals, 169 targets related to very specific criteria, very objectively defined criteria. And we want entrepreneurs to take up maybe some of these goals very
Right.
passionately
Very
and
interesting.
seriously, and track themselves on some of these goals. So I think these four things, I believe, are important if you really want to make a fundamental difference and feel good about it.
Vikram, it was a pleasure to have you. Honestly, I think this is one conversation that I've enjoyed so thoroughly. I can't even tell you. I mean, how I want that we should go on. There are so many things that I would want to discuss with you. But possibly I'll save that for the next conversation that we have. Thank you so much for taking the time out. It was a pleasure to have you.
Ashu, every time I talk to you, I really enjoy talking to you, and it's great, interacting with you, and we've known each other now for so long. So thanks a lot for this session. I really enjoyed this last an hour or so.
Awesome. Thank you, Vikram. Bye bye.
Thank you. Take care. Bye bye.